Good day, traders and investors. My name is Roger Scott, and I'm the senior strategist of Wealth Press. Today is Sunday. It's December 4th. Now, usually, most of the time, I do these videos Monday morning near the opening bell, but I've got to be somewhere early. We have a big meeting tomorrow morning, so I'm doing this the night before to give you a nice update, a preview, and some important levels so you can be on the right side of the market tomorrow. Now, overnight, or at least based on what we're seeing in Asia right now and Europe, the market's down just a little bit, nothing really crazy. But if you look at the bond market, you will see that the bond market, using a 10-day RSI, which is not really that great for trading, but it's pretty good for market swings. It's now showing that the bond market is overbought. And one of the reasons why you're seeing the bond market react this way is because the Fed is now in a position where they're giving off the sentiment that the interest rate may go a little bit lower in terms of their increases. In other words, they're probably going to go from 0.75 to 0.50 in December and remain at that level or go lower. Now, it doesn't mean, and I'm going to repeat this again, it doesn't mean that this is over, the good times are going to roll, we're now going to be in a deflationary market. That's not how it works. It's really, really not how it works. But what you do need to understand is that the sentiment is now changing and is now looking a little bit towards the bulls. But I'm going to be honest with you. The fact that they're going to be raising rates half a basis points instead of 3/4 of a basis points, it's not happiness. It's not really a lot of. There's only so much the market can do, and I believe right now, and especially based on where it is right now, let's just use this support and resistance levels here. I want to show you something. So you could see we're really right now near that level. We're already above actually that level right here. Let me just kind of reduce the time period. So you could see here, this is danger zone right now. And quite honestly, I don't think we're going to be sitting near this area for that much longer. I believe this is going to be the stretched out effect, and I think the bond market is going to go lower, and that's going to put more pressure on stocks. Now, as I say this, I've been talking a lot about this. This is the number of stocks trading above the 50-day moving average. Now, 50-day moving average is really, really important. Why? Because the 50-day moving average is not a investor's momentum level. It's the swing trading momentum level. And when you're trading the swing trading momentum level, or when you're using the swing trading momentum level, this is really important for short-term moves. And right now, the S&P 500, it's showing 90% of stocks are trading above the 50-day moving average. That's insane, and that's the highest level we've seen since March of 2020, which coincidentally was the bounce back from COVID. So, and as you could see here, let me just remove the time period. See how it's already peaking out? And while it's doing that, just so you know, and you could see here, while it's doing that, the S&P just happens to be, and I'm telling you, things are lining up right now. The S&P just happens to be at the near-term resistance level, just like the bond market, and the number of stocks just happens to be reverting lower, and volatility via the VIX just happens to be near the low, ready to be right here near this level here, which is one of the lowest levels we've seen in a very, very long time. Let me just go a little, see that? So again, the market would have you believe, and let me just show you the Dow, the market would have you believe that it's ready to turn higher and it's going to go higher, but not so fast. Why? Well, as I'll show you right now, that Dow Jones is as overbought can get right now. I mean, it is grossly overbought. Look at that. And it's diverging. Look at that. It's making higher highs. Momentum levels, they can't sustain that. And when you take that into account with the fact that the S&P 500 is now trading at its resistance level, and look at this divergence. I mean, geez Louise, look at that. That's not happiness right there. So I think we're going to see a pullback, and I think we're going to see more downside this week, and I think we're going to see the S&P head lower as the bond market begins to lose steam, and bond participants realize that, hey, even though things are a little better than before, they're not all that great. And I'm going to tell you another thing. This Friday will be a first complete week. Last week we had the Thanksgiving holiday. It was a fragmented week. This is a full week. We've got international trades and goods and services, and we've got PPI. Now, the week after that, the following week, we have CPI. Now, the PPI and CPI are the biggest reports for the Fed. That's what they've been looking at. They've been looking at the Producers Price Index and the Consumer Price Index to see where it is and how, if inflation has peaked. But I'm telling you right now, this is a lagging index, and it's not 100% to be trusted. So there's still a lot of factors involved in this that could cause us to go lower. Now, here's something interesting you need to pay attention to. For the first time in a while, sectors are completely screwy right now. And I'm telling you, I smell them out of whack right now. Industrial, healthcare, basic materials, these three are completely out of whack. Energy is not leading anymore. Industrial is leading. Now, I'm going to tell you why it's leading. And healthcare is leading. And I told you healthcare was going to lead for some time. But the reason industrial is leading is because you have a lot of defensive stocks. You have the Lockheed Martin. All right. You have the let's see, what other ones? Why do I need to guess? Why don't I just show you competitors and you can see what I'm talking about? Northrop Grumman, look at the 52-week high, 556, 545. Lockheed Martin, 498, 496. Huntington Ingalls, 260, 240. General Dynamics, 256, 255. Do you think it's a coincidence that these defense stocks during war are making all-time or swing highs? No. Now, but there are other industrial stocks like railroads, things that aren't really relevant to the war. Those are more like the basic materials. You got to watch them with a grain of salt. When we look at this, though, on a graphic trend, industrial, look at how strong the trend is. Healthcare is looking good. Basic materials so far is looking good. Energy, I wouldn't rule out right now. I think it's a pullback, and I think that OPEC is going to cut oil if there's going to be a fixed price in Russia. Technology, I think, is going to go back down to the 120 level. Utilities, I think, are going to stay firm with energies. Consumer staples are still looking good. Financials may get choppy here because there's a lot of uncertainty right now. Communication services looks like it's about to top out, and it looks like let me show you what communication services looks like. Communication services, look at that. Looks like we're in a channel, and it looks to me like we're overbought, and this channel is going to cool off. And same thing with consumer discretionary, and real estate can actually go up a little higher because we may be breaking near the lows. I'm looking for volatility to start reverting. I'm looking for bonds to start breaking down, and I'm looking for the stock market to start weakening out this week. Now, if you look at momentum levels, which we will at right now, the number of stocks making highs and lows, you got 276 stocks making 20-day highs. You got 32 stocks making 90-day lows. I'm expecting this number to increase and this number to decrease in the coming days. So we'll keep an eye on that. But I think we're going to have more volatility. I think we're going to have a shakeout. And usually when January to November is squirrely, meaning negative 15%, December over the last 90 years, it has not been a good month. So that is something I'm expecting. Now, folks, today I need your help. In just a matter of days, the Federal Reserve is doing something that could send shockwaves through the market, sending stocks soaring or toppling lower in just a matter of minutes. That's why I've been working with legendary trader Chuck Hughes on an underground project to help traders and try to get in front of this big announcement. Now, right now, it's signaling something powerful. This is why I need your help. Click the link below to unlock your mission. Help Uncle Roger, help Chuck. This is something really important, and we need your guys' help. So follow the link below. This is the first time Chuck is doing this. It'll all be revealed on Tuesday. I cannot wait for you to see it. And folks, be careful. I know the markets look very bullish last couple of months. It's a trick. They're trying to trick you. Markets are not bullish. There was huge selling pressure last week. I'll talk to you soon. Follow the link below. And if you're enjoying this video, let me know in the YouTube channel. Bye, guys. I'll talk to you really, really soon. Bye, and take care.